It's Tech Lid, and we're bullish. The stampede is coming, baby. In this video, we will be talking about the cryptocurrency Dogecoin. This is an article here from the Motley Fool. I know many people disagree with the viewpoints of the Motley Fool, and it is not the most reliable source according to some people, but the reality is, and the fact of the matter is, the Motley Fool indeed does have true facts, and it's not like they're lying. The only thing that it is opinion based, pretty much like everything else, but the Motley Fool does catch a bad rap. But at the end of the day, I'm going to tell you why I definitely disagree with most of the things on this article. Why Dogecoin is crypto's most dangerous joke. So I'm not going to read this entire thing. I'm not even going to read any of it really. We're just going to talk about some of the key points. Almost no one's using Dogecoin, but the currency still undergoes huge swings. About the huge swings, I'm going to show you on the daily chart. The monthly chart, rather than that, we're going to talk about how the swings happen and where they are. Another key point, a very small group of large holders have outsized influence over Dogecoin's price. So if you go down in the article, they're talking about whales controlling the blockchain, and then you have influencers on the outside, people like Elon Musk. Think about how much Elon Musk was ramping up Dogecoin. He was talking about Dogecoin consistently all the time, tweeting about it. Mark Cuban was another one who was talking about it consistently. And remember, there is just one address, right here, that accounts for 28% of all Dogecoins. I believe that number was actually higher. I think one person had control of 33% of all the Dogecoins. It has since seemed to slip just a little bit, as they now only control 28%. So definitely something that's very vigilant. You have to keep that in mind, because one person can move the entire market by selling everything they have. So that's always something that you gotta look out for with Dogecoin. What's the other key point? Investors who buy in chase monster gains they may come to regret. So if you buy the top, and since it's so volatile as it did indeed mention, you could be stuck with a bag, or you could be waiting a very long time until the price moves. But the reality is, this is kind of sort of the thing that you do with every stock, every cryptocurrency. If you buy the top, it could be a while till the price moves. That is no mistake. That is why you shouldn't buy at the top. Unless, of course, let's say any asset, for example, it has reached an all-time high and you buy in. The only reason you're buying in is because you see higher highs coming. If you're someone that is already on the fence to begin with the investment, why get in? If you're already iffy about it, do not get in when it has gone all the way up. You already had doubt about the investment, therefore you probably shouldn't get in it that high in the first place. And then hardly anybody uses Dogecoin, right? These people mention how Dogecoin blockchain has only recorded 23,000 daily transactions on August 9th. Look, they're comparing it with the 1.2 million transactions recorded on Ethereum and the roughly 200,000 recorded on Bitcoin. Now, let's be frank here and honest. They're talking about Bitcoin and Ethereum. These are the two biggest giants in cryptocurrency when it comes to their value. So if you're comparing Dogecoin to Bitcoin and Ethereum, of course the daily transaction aren't as much, because we're talking about the cream of the crop with those two on the top. So this is kind of just something that to me is a little fuddish. It's a little obvious. Of course Dogecoin doesn't have that many transactions compared to those two behemoths. Look, just a quick disclaimer before we continue. I am not a financial advisor. Always make sure to do your own due diligence and research when you invest in any type of market. Do the homework, do the research, you'll come out winning. Bank on it. We're going to take a look here at this chart from tradingview.com. This is the monthly chart. This is what they were talking about with those price swings. Here we have these red lines as the indicators for support. The first level of support, 19 cents Dogecoin. This is the monthly chart, people, so we're only talking about a month back. The next level I have at 23 cents. Then the next level of support I have it close to 28 cents. The current price is right here, 29 cents. And then the level of resistance that I'm looking for Dogecoin to surpass is right here at 32 cents. If we could break that 32-cent plane, I think Dogecoin goes back to 35 to 40 cent territory, and then it could work its way up and see if it could create new levels of resistance, new levels of support, and definitely just keep climbing that ladder. But this is what they mean. It is definitely volatile. Imagine you put in a large investment right here, 32 cents, and then it goes all the way down here to 19 cents once again. That is why I believe that, especially when you're trading, just trade within the levels, 1 to 2, 2 to 3, and you just go like that. You can't just bank on it to keep rising all the way to the top, unless of course you're a long-term investor, because fundamentals play a factor. There will always be catalysts going on and things like that that will eventually push the price where you want it to go. But for short term, I do not recommend trying to hit a home run overnight. Sometimes you get lucky, sometimes it does happen. But the reality is, in crypto especially, the long game wins. If you enjoyed the video, make sure to give it a thumbs up. If you didn't, simple, give it a thumbs down, it's all good. If you haven't done so already, please do consider subscribing to the channel, as it helps tremendously. Hit that notification bell in order to stay notified, up to date, and informed. Until the next time, peace and love to the Tech Lid Legion.